All right. Good morning, afternoon, or evening all. Thanks for joining us today on Stable Stories. Stable Stories is a video series that explores the behind-the-scenes experiences, learnings, and insights of builders pioneering in the stablecoin industry. Today we have Markus Franke, the CEO of Mento. Mento is building the future of on-chain FX. Thanks so much for joining us today, Markus. How's it going?
GM. Hi, Dave. Thank you so much for having me. Really excited to be here, talk about stablecoins, FX, and everything Web3. Exciting. Thanks for having me.
Awesome. Yeah. Thank you for joining. So the first thing that we kick off pretty much every episode with is we like to get a bit of a survey from all of our guests who obviously work in stablecoins. To share a little bit about what their first experience with stablecoins were. Was the first time you used it? Used a stablecoin? What was it like? How'd you feel?
Yeah, happy to share more here. Actually, the first time I think was around 8 years ago. I'm coming from an economics background, worked on different types of research in the broader economics field, and always worked as an economist. And then 8 years ago, I joined the early Celo team. If you today look back into the initial Celo white paper that was out there, it read a bit more like a stablecoin white paper, because one part of that bigger story that Celo wanted to tell about financial inclusion, creating the conditions for prosperity for everyone, building financial infrastructure for regions where this doesn't exist. A big part of that narrative have been stablecoins. And back then, when I joined the early team and we wanted to build out a very good and robust and safe to use stablecoin platform, we looked into what is out there. So the first thing I actually looked into, and actually the first stablecoin I used, was DAI, Maker DAI. It absolutely fascinated me because everything was transparent, everything was built on with smart contracts. I could basically look deeper into how DAI worked, and I also directly looked into the initial DAI white paper, which I think back then was not at the quality of like it is today, and also the content Maker puts out today. But it, like, from day one, was a fascinating stablecoin project and the first stablecoin I tried out.
That's very interesting. That's very similar to me. I read the DAI white paper as well. I'm sure you understood it much better than I did. It took me a couple of times, and I'm not even sure that I got it back then, but definitely piqued my interest. Oh, that's awesome. And speaking a little bit more about like the Celo origins, it's interesting that you say that the best fit for a stablecoin project was Celo, because we see so many real-world use cases spinning out of the Celo ecosystem now as it sort of like steps into the stablecoin space as it's maturing.
And I think back then there were not as many L2s around that could offer cheap or very cheap and very fast transactions. I think that was or is one of the main important things for an efficient stablecoin landscape, that you can do secure, fast, and cheap transactions. Back then, I think something that was unique with Celo, and today it still has this functionality, is that you can pay for transfers, you can pay gas fees for transfers in stablecoin. So if you send a Euro stablecoin, you can pay in Euro stablecoin. If you send a Philippine peso, you can pay for gas fees in Philippine peso, which enables a lot of interesting applications around stablecoins that are focused to retail users, end users that are not experienced with Web3 infrastructure, and how in some ecosystems back then you needed like different currencies, one for gas, one for the transaction itself. So I think that like really made sense as an origin or a stablecoin origin story.
Agreed. The rest of the industry is just catching up to that now. The ability to pay in the token that you're actually sending. Awesome. So from the DAI white paper to Mento, would you go over a little bit about how Mento got started and your background with that?
Absolutely. And Celo is the Esperanto word for purpose. Mento is the Esperanto word for mint. So we're coming out of this ecosystem. So we stick to the Esperanto theme and started as the currency mint on Celo. In the end, the idea with the Mento stablecoins from day one was always, A, there's a need for different currencies, and B, it should be fully decentralized, similar to the Maker idea, because you want to have like full transparency in stablecoins about the collateral, about the counterparty risk, if there are counterparties, about the structure and risks of the stablecoin you use. These were always the initial idea. On the need for different currencies, I think over time, and especially in the recent years, it became clear that giving cheap and good access to a dollar is a huge use case for stablecoins, because in many regions in the world where there's not as stable currencies like the dollar, getting good access to a dollar is very valuable. And therefore, if you're in a country with extreme high inflation, for you, this can be very valuable because you can go out of your inflated currency into a more stable currency easily. So I think that is a huge use case. But at the same time, there's also use cases and demand for other currencies as well. I always tell a bit the story about micro-lending, why this is a great example, why there's a need for other stablecoins and other currencies especially. If you're an entrepreneur in a country where there is some inflation, where your local currency loses value, for example, against the dollar, but your revenues are in local currency, then you also want your loan to build out your business be in local currency. Because if your revenues are in local currency, the local currency losing value against the dollar could make paying back a dollar loan expensive, and therefore you have a preference for a loan in local currency. So this is just one example why there is a need for different currency stablecoins. And I think the second thing, and this is something we as Mento now also have more and more in our communication and how we actually want to grow, is the largest market in the world by far is the FX market, the market for currencies. Bank for International Settlements estimates this market to be a $7.5 trillion a day market. So it's huge. It's even bigger than the credit market. And therefore, just because it is the biggest market in the world, it should also be reflected on chain. A part of this market should come on chain. This market, the market for currencies, is still highly inefficient. It still runs on legacy infrastructure. It is still not 24/7. It still doesn't exist between certain currencies or in different regions. It's not easily accessible. And therefore, Web3 or blockchain as a technology is the perfect technology to bring a part of this FX market on chain. And this is exactly what we want to do with Mento, the whole Mento community thinks. To get a part of the FX market on chain, we need to build the right infrastructure so that it actually then makes sense on chain. Because infrastructure on chain in the past wasn't right. We haven't seen huge adoption of local currencies, stablecoins in the past, and maybe that now actually changes.
Yeah, it makes total sense. And that actually is a perfect segue into my next question. I was actually watching a presentation you did during Stable Summit at ETHCan a few weeks back. And I found it really interesting that you talk about bringing FX on chain, but it's not as simple as setting up a two-sided LP and an AMM. There's problems associated with both the on-chain and the off-chain versions of FX markets right now. And I'm wondering if you could dive a little bit deeper into how Mento reconciles those problems and ensures the FX rate reflects on-chain what is actually happening in off-chain markets.
Absolutely, very happy to chat about that. And In general, AMMs are great. It's nice that you have basically a method of exchange on chain where you have a new way of price finding without a centralized entity that controls the order book, and everyone can actually participate. So I really like AMMs. What AMMs are not good at is to mirror off-chain prices. And the FX market clearly is a market where currently, at least, price finding happens off-chain. I mentioned the size of the FX market, $7.5 trillion a day. Hundreds of billions are floating, for example, in the euro-dollar market. So the price of a euro in dollars or the price of a pound in Swiss francs currently is for sure determined off-chain. So that an AMM then reflects this price correctly, somebody has to balance these pools in the AMM. Otherwise, the price in the AMM is off every time either the FX market moves, which is pretty frequent, or every time somebody actually accesses one of the pools and accesses the currencies in these pools. So long story short, AMMs are not the best setup for mirroring off-chain prices, and prices are determined off-chain currently in the FX world. What we've set up is a bit different. It's all still smart contract based, all decentralized, all fully open source. We call these types of markets that we've set up with the Mento FPMMs, fixed price market makers. And I think it is as simple as that basically the pools query a bunch of different oracle rates. In the beginning, we've built Mento oracles, but then over time we've integrated Chainlink and Redstone and other oracle providers to query basically to query a wide range of currencies. So far, we have 15 currencies live in these pools. Of course, dollars. So there's a Mento dollar stablecoin, but also, for example, the USDT and USDC, and then other currencies as well. All the G7 currencies, so a yen, a euro, a Swiss franc, a British pound, and then also more exotic currencies, like, for example, a Kenyan shilling, a Philippine peso, or Colombian peso. So currencies from all over the world. And the beauty of these FPMMs is you can actually add more and more of these markets. You can add more and more stablecoins. You can add non-Mento stablecoins. As I mentioned, we've already added USDT and USDC, and therefore allow users to swap stablecoins at the FX rate, because the market, the FPMM allows you to trade at the FX rate every time when there is an update, every time the Oracle basically update the FX rate. And if there are no updates, for example, on weekends, or because in some markets there's currently no activity, the Kenyan shilling the Kenyan shilling Oracle doesn't report, then the mechanism falls back to an AMM type of mechanism. So it's like every time there's an FX update, these types of markets give users a more efficient price. And I think this is important because having not only the option to use different currencies, but also having proper pricing for different currencies enables a lot of things that actually then follow in the stablecoin value proposition. So, for example, imagine you're a on and off ramp in a certain market. If you actually, with these types of markets, are able to manage your FX exposure efficiently, you are able to provide cheaper on and off ramping. If you're, for example, a market maker in a certain country that makes the Bitcoin market against the local currency, for example, against the yen or the pound or the Swiss franc, also there, depending on the Bitcoin price, sometimes you have high exposure to the local currency and sometimes you have low exposure to local currency. Also there, you need to rebalance at an efficient rate. So also for you, these markets can be really helpful. But also for any end user actually that either wants to trade in FX, or that wants to hedge FX, or that wants to send a cross-border transfer, or that wants to pay in local currency, for them, efficient FX markets are extremely important.
Makes sense. It's really interesting. And it's funny because I think at this point of the stablecoin adoption curve, the majority of people have settled into the idea that the world wants US dollars for whatever reason. And most people are thinking stablecoin adoption looks like users around the globe opting into dollars specifically for whatever reason, whether it's fiat hedge, inflation protection, remittances, global transfer. But I'm wondering what interesting use cases, apart from sort of what you've talked about now, or what the majority of the use cases are that you're seeing from people using the global FX market that you've set up.
And I mean, hey, we are in blockchain, we are in Web3, so the first use case is always trading. So people like to speculate. They want to actually also speculate on currencies. They want to express opinions on, is the dollar like trading higher against a certain currency or trading lower against a certain currency. And if you're in Nigeria, for example, then maybe actually your local currency is losing a lot of value against the dollar, and you want to be able to express that opinion in a trade. That is a first use case. On the other hand, there's much more than just speculation. I mean, there's not only areas in the world where in the past the dollar actually increased in price. For example, against the euro in the past 6 months, the dollar actually lost 15% of value. If you're also therefore a project in Europe and you want to work with stablecoins and want to offer your users stablecoins, maybe for you it would be better to actually offer them access to Euro stablecoin, not only because also from a regulatory perspective, similar to Genius in the US, we have MiCA in Europe, so there's a regulatory framework for stablecoins, but also because if you're a business or if you're a user in Europe, maybe you have a preference for using your local currency and don't have FX risk against the dollar. And the same is true, of course, for all the other G7 currencies, maybe a Swiss franc, maybe a yen. You don't want to hold that FX risk. And FX risk doesn't mean that you want to hedge away that the dollar is losing in value. It just means if in your business, your taxes, your input factors are all basically charged in local currency, and also if your revenues are in local currency, using a different currency would mean an FX risk. If you're a Uber or Lyft driver in Europe or in Japan and you pay for gas in yen or in euro, and if you pay your taxes in yen and euro, if you have your payments in yen or in euro, then maybe you want to use a yen or euro stablecoin. So I think that is important, and having proper pricing for these stablecoins, for these local currency stablecoins, is extremely important, because this is, from my perspective at least, the reason why other currencies outside the dollar haven't taken off on chain, because there was just no efficient market for these. And this is exactly what we want to solve, what the whole community is working on, providing a base FX infrastructure that in future should be available on many different ecosystems and many different networks. I think this is really, really important, so that actually then this FX trading and other currencies can actually take off in Web3.
Yeah. I mean, just in my mind right now, I can imagine a world a few years from now where I would take a trip to Japan, pay the taxi driver with my USD stablecoin, and have that reconciled instantaneously in yen to the taxi driver's wallet. That's set up that way.
And this is the beauty of Web3, right? It can be reconciled globally. It can be 24/7 with now new chain infrastructure, cheaper block space, more efficiency of many different chains, of like also DL2s and so on. This can then happen actually with global settlement that is instant or that is maybe within a second or so. All of this infrastructure didn't exist even like a short time ago.
Yeah, it's very exciting. But so Mento is building the on-chain FX platform, but that's not all. You also issue stablecoins as well, because one job's not enough. You guys decided to take on two jobs, two massive undertakings.
Yes.
For the price of one. That's amazing. And you mentioned that there are 15 stablecoins that Mento's issued thus far.
Yes, exactly. It's 15. We're doing both jobs not because they're easy, but because we thought they're easy, and now we're stuck there, which is bad. No, it's I think more there. If we want to offer proper FX infrastructure, we need to offer different currencies, and there are 15. There are all the G7 ones and 8 others for now. But I think the beauty and the important part here is any other stablecoin can be integrated. And if there is a really cool Colombian peso stablecoin, and there is already one, the C-Corp, then it should be integrated. But if there's maybe in future also a really cool Argentinian one, then it should also be integrated, because you need basically these markets for every currency, and this is the idea.
Amazing. And how do you think, I guess I have a two-part question around this one. The first being, how does Mento decide which stable coins to support? And then as an extension of that, how does the project decide whether it makes more sense to integrate an existing stablecoin versus spinning up one natively with Mento?
And now that's the famous Venn token question, because all of this is governable.
Okay.
and I think this is then these two examples, which stablecoin to integrate, or is it better to basically build a new stablecoin or integrate an existing one? These are two extremely important governance questions that can be solved with the Mento governance token. Mento governance now is also brand new. This all is coming. We've mentioned this in the beginning of the podcast. We are coming out of the Celo ecosystem. So in the beginning, all of this was actually governable by Celo governance. But here we are now talking about an FX platform. And the idea for this FX platform is to go cross-chain, and therefore it needs its own governance. And for its own governance, it needs the Mento governance token. And with this token, the governance token holders can exactly decide in all of these decisions and more. There is also revenue that accrues to the platform, to the protocol. There's some yield on stablecoin collateral, which is basically just flowing back into the platform. And then B, there is swapping fees. They are really, really small to make this market really, really efficient. But still, there are small basis point swapping fees. And also these swapping fees accrue back to the platform. And also here, the governance token holders can decide what to do with, for example, with these fees, how high the fees should be, and so on. So all on-chain governable.
Amazing. That sounds like a very good use case for a token. I'll keep my eyes peeled for more announcements on that.
Absolutely.
One thing you did announce that I definitely wanted to cover as well was a very recent partnership announcement with Wormhole to take Mento multi-chain. So if you could go over that a little bit, talk about where Mento is right now, where it's available, where it can be used, and what this partnership will unlock, and where you see that accessibility being in the near future.
Absolutely. Yeah, really happy to talk about this, and yeah, very happy for many different reasons. Because I think bringing this now to other ecosystems is an amazing and big task that has a lot of potential. And B, also because I really enjoyed working already with the Wormhole team. They're an amazing team. So it's really cool project, and they also support Mento a lot, which is really exciting. So let's start with why this makes sense. Why are we doing this? So when we want to build proper FX infrastructure to bring FX trading on chain, it should be on more than just one chain or one ecosystem. Some of the FX traders might have preferences on where they trade. Some of the FX traders maybe not. But in general, I would say proper FX infrastructure is table stakes for the Web3 ecosystem, so that on every ecosystem where we roll this out, stablecoins become accessible very efficiently and at the right price at the FX rate in the end. So I think it has to live cross-chain. In a similar way that also now on Celo, there are many different stablecoins live, Mento should live on many different chains. And there are chains that have maybe different focus points. Some chains are focused more on the retail side of users, maybe users that sit in Kenya and in Ghana, and because there is no direct market between the Kenyan shilling and the Ghanaian cedi, and they don't want to, in every FX exchange, go with legacy infrastructure, with a T+2 settlement via the dollar to the other currency. I think here, for retail users, having this makes a lot of sense, and then maybe an ecosystem that focuses on retail users in these countries makes sense. But then there are also, as we mentioned before, there are all the traders, and there are ecosystems that focus on the traders. They should also have proper FX markets available, and therefore bringing this cross-chain just makes sense. And to bring this cross-chain, Wormhole is a great partner here. They have integrated all the important ecosystems out there. They have a very open infrastructure for all the cross-chain elements. Yeah, we really enjoy working together with them.
Amazing. Yeah, congratulations on that.
Thank you. Yeah, exciting times for us. That was actually a big deal. The Wormhole announcement was not only basically the announcement of now we have chosen a partner to bring this cross-chain. It was more of now it's official. We are really going cross-chain, and therefore it's really exciting.
Yeah, I think interoperability is a huge unlock. So totally. That's awesome. So coming close to the half hour, just before we close out, I wanted to ask: is there anything that you've noticed that really surprised you in terms of the usage on the Mento platform right now, either in terms of a surprise currency that has gotten a lot more traction maybe than you were expecting, or a specific use case that was interesting or unique or that caught you off guard?
Yeah, I think something that I found really, really interesting, and I actually attribute this as an indication that FX is now really moving on-chain, is that we've seen a bit of volatility in the Mento platform use over the past 12 months. And we looked a bit deeper into where this is coming from, and it actually had to do something with dollar volatility. There have been certain events that are natural, that they basically lead to dollar volatility. There has been the election, the US election, of course. This implies some volatility for a currency. There's also been what is called Liberation Day, basically the announcement of tariffs in the recent months that had an effect on the dollar and basically on the dollar rate to other currencies. And exactly on these dates, we've seen a lot of trading volume going from dollar to other currencies. And I think this is really interesting because I would say this is probably not the retail users that want to express an opinion on a currency. It is rather basically the traders that want to benefit from that volatility, and therefore, yeah, for me, an indication FX is really coming on chain, and I found it interesting because it was linked to real events, and therefore maybe some interesting anecdote on our data here.
Yeah, if you can facilitate liquidity to flow to wherever uncertainty is, usually
yes,
it means you're doing something right.
Exactly.
That's super interesting. Perfect. Well, listen, thank you so much for joining. Definitely keep. Again, I'll keep my eye out for announcements on the token launch. if people want to follow Mento, follow you, where should they go? Yeah.
Of course, easy is always to stay up to date is go to X, formerly Twitter, and you can follow at Mento Labs there. You can also follow me. I'm Markus Mento on Twitter. We, of course, have on mento.org and all the web pages of the ecosystem, we have information. There's also a Discord channel on chat.mento.org where you can access it. So we want to be really, really open because we want to, of course, work together with the community and the different communities, especially now that we're going cross-chain. And yeah, I really enjoyed the conversation with you. Thanks so much for having me here.
I did as well. Thank you very much, Markus. And we will include all of the links that you mentioned in the show notes on YouTube so people can get to them easy.
Amazing. Thank you.
Great. Have a good afternoon. We'll talk soon.
You too. Talk soon. Thanks.
Thanks. Bye.
Bye.